Hello everyone, welcome to LearnStocks101.com. Our free market video is Sunday, August 10th, 2014. I entitled this one In the Woods just to try to be a little different instead of saying not out of the woods. But as I've been talking about over the past week or so, the moves when you get a down market, and what do I define a down market as is probably the question here. Whenever we break this 21 EMA and things start to get a little dicey, you see the violence of the moves here, big moves. You see, if I draw an arrow down from that candle where we broke, you see all the volume that's come into the SPY since that point in time. And that means, I showed you the average two range video or the indicator before, which the ATR is jumping up a little bit. See all the volume jumping in. And the swings, the bounces, the short covering rallies, up and down, really no direction because we're staying in the same place but moving very violently. It's like running, almost like running on a treadmill at about the fastest speed it can go, because you seem like you're going real fast, but you're really not going anywhere. The ES is, if I go to like a 5-day chart, you'll see on the ES is how violent these moves have been, because this was pretty much when we hit this top here. That was the 7th of August, which was Thursday, and then we made a pretty good down move, and then even into the opening morning of Friday trading, this is like 4 o'clock in the morning right here, we were hitting the lows on the ESs, touching that 100-day simple. We made a pretty good recovery from there, because what happened was a lot of shorts said, "Oh my gosh, this is the one to jump on. I don't want to not be on this train to the downside, because that's where you make all your money." Then all of a sudden they had to all start covering as it started going higher, because that was a big short covering rally that happened at that point in time, because everybody jumped on the train, but the train didn't keep going in that direction. So what I mean by not out of the or in the woods is that it really means we're not out of the woods, because we got to get above this downtrend line to stay completely bullish on a trending basis. I mean, we know that the trend of this overall market is rather bullish, but trends can change, and it's just one of those things. You don't want to be on the wrong side of a trend change. So we got to continue to watch that 21 period simple or exponential moving average, because all the markets are sort of, I don't want to say they're similar. They're similar, but they're not the same. We all got them below the 21, and they could and you see the Qs testing the underbelly here of that 21 EMA, and the IWM still has some room up to the upside, sort of like the SPY, to test this downtrend line that we have working right here. So again, a little bit more room to the upside. You see, again, it's like I said, it's like running in place on a treadmill, the fastest speed. You're moving, you're making a lot of work. I mean, a lot of things are happening, but overall, you're really not going anywhere. So we have to pick the right setups. Stocks that don't care, sort of. Stocks that are doing their own thing. Stocks that have a very good risk reward, shall I say, or a very good or support nearby. So I got a couple of requests here, and then I got one that I really like. But a request on Apple, because Apple a little bit of a bottoming candle right here, a little bit of a hammer bottom. But I mean, in the term of the candle, it really is. In the overall scheme of candlesticks, it's not really a situation where it's a huge buy signal. But if you get a gap up on Monday and this market continues to roll in the direction it is, I've been saying all along that the only thing that's going to take Apple down here, I mean, breaking this trend that we have put in since the earnings report in April, the only thing that's going to break that trend, I think, is the market. So we got a bottoming candle. I like a stop at 93.28. If you get a gap up and try to let it run, just start trailing your stop on the daily candles up to 98.84. That gives you a little bit of room. Again, we're looking for a gap up on Monday on Apple. If that happens, and again, that puts a low risk in there, and that's a little bit of a reversal candle too. I'll show you JetBlue to last. That's mine that I like. People wanted updates on Disney and Zillow, which I have covered recently. I just gave my members when I give my members the Sunday video and all the videos, really, I like to give them setup stocks and radar stocks. And setup stocks are ones you could trade right away off of any kind of base of support, good risk reward, And this made the setup area because 84, 87, 88, $85, I like this trade because that's the base that it's been holding pretty well. And that's also the 55 EMA. You can go, again, I got 84, 87 tagged. You can use 85. Because if it breaks out, and this is in a daily squeeze, and let me show you, I've shown you this many times. Bollinger Bands inside Keltner channels, and that's what these red dots indicate. So what you want to see is these Bollinger Bands start to move out towards the Keltner channels, and they're really not doing that right now because that means it's going to blow up in one direction or the other, sort of similar to the way it did right here. And that means you get a big fiery move. Now, normally in this situation, I would tell my members that, this is just, wait till those Bollinger Bands start to move. But with such a low risk, and if the market continues to bounce, if it makes a bullish move, you have a 84, like I said, an $85 stop with a target of 87.61 and another one at 89.19. And if it really keeps running, 91.20. And Disney is also one that's not going to rip your head off if you're wrong. People want an update on Zillow as well. So Zillow, big violent move here when they bought Trulia, or I can't remember how that's gone, if they were looking at doing that. But just basically, it doesn't really matter what happened. It's just this was a news event. A lot of volume came in. Big violent move, hit a high up here, 164.90. We had a breakout level at 176.11, then 190. But it's come back off of that, so it's violated the ambush zone. And what I mean by an ambush zone is that when you're in an uptrend, let me try to explain this, and you are making higher highs and higher lows. This pullback area tends to be around the 50% to 61% retracement of this previous swing. And that's what I've done here. I've taken this previous swing and got the zone that it needed to hold. So it's violated that zone a little bit. So the update, there's just asked for a general update on Zillow. So it's sort of hanging out in here. Zillow could go either way. You're either short biased with a stop at 144, which is the upper end of this band, or you're long biased with a stop at the low that it's recently put in at about 134, because you want it to hold there. Usually these will tend to base around in here for a little while when they don't make a decisive move on the break. So again, I was just asked for an update. Again, depends on the bias, depends on the market movement. It's long at 134, stop with short with a stop at 144. And again, the one I came across in some scans tonight, JetBlue I really like because it doesn't seem to be caring what the market's doing. And what I mean by that, I'm talking about a short period of time. So if we roll over to the SPY here, you can see the SPY has been jumping around and mainly to the downside. So since 31st of July, the SPY has pretty much been down and jumping all over the place. We had a little bit of that since 31st of July right here. This is actually the 1st of August. JetBlue has stayed sideways and mainly on an uptrend. So this is a breakout play for me. This is a trade that looks like it's going to blow up, and if it doesn't, I don't want to be in it anymore. So I've set my stop at the low of the previous day, which is 11.01. So I got a 45-cent stop on this one. So let's call it about 4%. But the risk reward, 45-cent stop, if it blows up from here, the first target is about a 1-to-1 risk reward ratio, about the 12.03, so about 57 cents to the upside. But if it really makes that move that I think it can make, we're looking for a move possibly all the way to 12.61. Again, it's not really caring what the market's doing. It's doing its own thing. The indicators are showing that it might want to get blown up here. DMI cross, RSI moving up, MACD making a good move up off the lows. So these are trades that I like, setups that I like. Again, setups in this kind of market have to have decent, again, don't care what the market's doing, decent support nearby. A lot of things have to be going in their favor. It's just not trade anything right now because I like things that just don't care. And if we go back through it, Zillow really not caring, because we had violent moves in the market on Friday and Thursday, but it really just sort of stayed in place. That's why that's one to look at. Disney, as you can see, cares, but like I said, the risk is so low there on the low side. And Apple, just basing, like I said, waiting for the market to do something. The only way the thing takes Apple down is a very deep down move in the market. You guys have a great week, and we'll see you in Monday's video.